Ladies and gentlemen, while we are waiting for the super finals, we decided to prepare a panel discussion for you. How high impact brings high returns, and why now is the best time to invest in agri-food tech? We will hear discussion on this particular subject. Please welcome our panelist. Jowita Sewerska, Investment Director at European Circular Bioeconomy Fund, is with us. Please give her a warm welcome. Tijl Hoefnagels, a venture partner at Rubio Impact VC. Ravji, partner at Cardumen Capital, and Laguna, climate tech investor and World Fund. And of course, our panel moderator, Winshel, Chief Executive Officer at FullFill. Ladies and gentlemen, the stage is yours.
Thank you very much.
I think there's more people here than there.
Yeah, so what if you all could do the talking and we'll ask the questions. Who has a flight that you have to run out of here for midway through? So you should all say yes, because then it gives you an excuse in case you don't find it as compelling as it's going to be. So yeah, that was a missed opportunity for everybody. So the topic, I'm going to play with the topic just a little bit, and I think what people really want to hear about is what's being invested in today, why are you making those selections, why is now a good time to be investing in the food business, broadly writ. You know, we'll talk agri-food, we'll talk other areas of it as well. My association with all this is that my company is essentially a behavior change company related to chronic diseases, and nutrition, of course, is a very large part of that. What I want to ask each of you to do is just a quick introduction, although we have plenty of time, so it can be as long as you want it to be, but quick. And then maybe just a sense of where you fit into this ecosystem of investing in, and I'm going to keep referring to as food writ largely. You can narrow it down if you so choose, and we can share.
Sure, thanks, Steve. My name is Jowita Sewerska. I'm an investment director at European Circular Bioeconomy Fund. We are a 300 million euro venture capital fund. It makes us one of the biggest sustainable tech funds in Europe. We invest in bioeconomy. Here, under this umbrella, we have a couple of verticals. This is food. Under this, we have alternative proteins, ingredients. In the food space, we have agtech. Anything that increases yields of crops, reduces waste. We have sustainable packaging, mainly replacements of plastics. We have biomaterials, biochemicals, also sustainable textiles. We are growth stage investors looking at companies that have already first significant market traction, and right now they want to scale up, so either internationalize or increase their portfolio. Yeah, we invest in Europe. Formally, this is EU and Horizon 2020 countries. That's it.
Thanks. My name is Tijl Hoefnagels. I represent Rubio Impact Ventures. So we're an impact fund. This is our second fund. We started in 2014. We now have deploying a fund of 110 million. What we like to do is fund entrepreneurs who are basically addressing the big challenges of our time. I specifically look at climate change and biodiversity loss. And I do that through the food and ag angle, food and ag lens. We do seed and Series A, tickets 500K to 2.5 million in the first round. And we really like to see the game changers, so the champions of change, that's what we're looking for.
Okay, thank you very much. I'm Sejal Ravji. I'm partner at Cardumen Capital. I look after our agri-food tech fund. It's a 50 million fund, and actually we're having our first closing shortly and our first investment. So I think these guys are clearly way ahead of me there. So we will invest in Series A, okay, geography, Spain, Europe, Israel. Ticket size between 0.7 and 3 million. So I know, there are a lot of people I've met during these couple of days, and it's been awesome. There's some amazing startups here. Cardumen Capital, actually, it is our first food tech fund, agri-food tech fund, but it's not our first fund. Cardumen Capital, previously we had 2 funds. We have 2 deep tech funds, investing in cybersecurity, big data, AI. Mainly in Israel, we have 26 invested companies, and portfolio valuation of about $500 million at the moment, so we're doing pretty good. Yeah, we have another fund coming up, sports tech fund, so it's probably for another conversation. But yeah, glad to be here, and yeah, look forward to having an interesting conversation with the panel.
Thank you. I'm Pia of World Fund. We are a climate tech venture capital fund targeting 350 million, and we focus on technologies that can contribute largely to decarbonizing the economy. So with that, we invest within the highest emitting sectors, so from energy, buildings, mobility, industry, and then last but not least, of course, food and ag tech as well. And we do seed to Series B initial tickets of 1 to 15 million, but also have a big part of the fund reserved for follow-on investments, so we can double down. And did I mention we're focused on Europe geographically? Yeah.
Great. Excellent. Thank you all. I'm just curious, who here, show of hands, is raising a round right now? Well, very few, or
They're all talking to
the VCs and the other VCs in the back. How many people in here are VCs, are funds themselves? Okay. So those of you who raised your hands, first you should talk to people on the panel, and then the people who have the raised hands as well. So
It seems there's also other people coming here for lunch, because
yes, that's exactly right. So I'm going to ask a question that I'm curious about, sort of selfishly, which is you each have areas of focus. And the obvious answer to this question is, well, we think the important trends are the things that we're investing in. It's not always the case. I'm curious, do you see trends, and what are they in investing in the broadly writ food industry, and then where does what you're doing fit into that? It's kind of a broad question, but it's a chance for you to talk sort of specifically about what you see happening in the industry.
I will start then. So here in terms of agri-food, of course, these are two different verticals, even though one is upstream, the other one is downstream, but so there are some parts that they have in common. So going for bigger sustainability, more consciousness around the verticals, but they are still kind of specific because there is different audience or target players that we see as VCs or as investors that companies should target. On the food tech side, of course, here we have consumers, the end consumers that we all are, and here what we see in terms of trends is, of course, a matter of bigger or more awareness about sustainability, but also that has been happening for some time already. Going into more products that are plant-based instead of animal-derived. But at the same time, the big trend that is currently happening is more consciousness around health. So it's not enough to be more sustainable, but also you need to have clean labels, and so on. On the ag tech side, here the target audience, I would say, is different. These are farmers, and here it's a different group. So here what we see is that for sure farmers, they are a bit conservative in the way of adaptation of new solutions. Here they look at economics of their business, and it's not an easy market in the sense that it's not like eating a burger or something that you can eat, 365 days a year or something, and choose or try everything out that is on the market. But here they see something only after a cycle, right, that they have on their farm. So they need to have very strong. They need to see very strongly that some solution, innovative solution that they will apply, makes sense for them in terms of economics. And here a big trend, in addition to typical things like replacements of pesticides, herbicides, and so on, what we see is adaptation to climate change. This is an interesting category that is right now being developed. So, for example, one of our portfolio companies, they are called Elysif Fund from France. They have a product that is tackling hydric stress. So exactly, right now what is happening, simply thanks to their solution for when plants are exposed to drought, they can grow roots, they can close their pores to avoid evaporation of water, and they can survive for longer. And this is really something that is very convincing to the farmers, because they see, well, this is what is happening anyway, we want it or not, and we need to adapt. So this is a relatively new product category, and I think that it is a very interesting area, a very interesting trend that is developing in terms of VC investments.
If I'm going to get a quick follow-up, because part of the title of this is, high returns. And I'm curious, and so I'm going to probably ask each of you the exact same thing, so get ready. When you're making decisions in those two very large categories, what do you consider to be the return that you're after? Is it a numeric return? Is it an impact in a different area? Or how do you define a high return?
Well, in terms of returns, so for sure, I mean, we look at both. So it's not something that what we get asked a lot is that, okay, so do you need to compromise on financial returns if you look at sustainability? So actually, this is we don't compromise on it. Both need to be there. Actually, we treat it, of course, financial return is obvious, right? We are purely commercial fund, so it is something that we are looking for. In terms of sustainability, actually, what we really like is that this allows us to get early signals on what kind of technologies will actually be successful in the future. So it's right now you can have many technologies that are unfortunately not as good as they seem to be. You need to really look at things like LCAs or health that they bring, right? So to avoid some kind of greenwashing. And we see that the solutions, or how we like to look at it, is that the ones that survive this filter, from us, they simply will succeed in a longer term.
Everybody takes the same thing, but also feel free, I'll do the follow-up as well, but jump in if you have something.
Yeah, so maybe our fund structure is a bit different. So our carry, our bonus, if you will, is connected 100% to our impact KPIs, which we find important. So we make sure that our goals with the entrepreneur and the fund is aligned. So that also means we have a daunting task of setting KPIs pre-investment, which is not always easy. So you're doing your DD, and then you sort of have to find the key number which will pinpoint the impact you're making. But that's a very cool exercise, I think, because you really go into depth with the entrepreneur. What are you changing, and do we think that's good enough? That's what we're testing with our external board, our impact advisory board, because as it has a monetary component, you have to get that incentive. We cannot, judge whether we did it right or not. And that gives a very interesting selection. So that's the first selection we make. Do we think we can set an KPI which is ambitious and which makes sense, also from an impact perspective? And then we say, okay, then to have the maximum impact, it has to be a successful business. So you have to be high growth, good revenue. So we are then basically after that hurdle a regular VC, trying to push the company to grow as much as possible, because more growth is more impact.
Not much to add. I mean, I think that's a myth that high returns have to be compromised, with impact. I believe so. We're still early investors, and these guys can tell me more about that. But the way when we speak to our investors and LPs, there's a massive appetite, okay, to invest and ensure that it's way beyond high returns. The other thing I have to say is, we are and because of that appetite, we decided, and I think I'm going to create a little bit of a Pandora's box here, which is probably good, but we decided to, certify ourselves as an SFDR Article 9 fund. Okay. And the reason we did that, and this is where maybe some parallels will tell, but tell me off a little bit, and that is, we're very conscious of the fact that there is a lot of greenwashing going on. But we're also conscious of the fact that somehow we do need to report to our investors how we measure impact. And so therefore, Article 9 gives us some guidance as to how we do that. That doesn't mean to say that it's perfect, okay? But we do need that guidance because nobody really knows, okay? So there are certain things that you're trying to measure. You don't know whether actually that measurable is real or not. That's one thing. Two, you're trying to adapt certain new technologies and you actually don't know exactly how impactful they're going to be. Three, in everything we do, we measure a little bit of the supply chain when actually it's the entire supply chain. I was talking to somebody earlier today and there was a startup that are doing food supplements for cows, okay? And what that does is those food supplements reduce emissions from the cows, you know, from the burping and, you know, flatulence and etc. And in itself, that's a cool idea, right? Because what we're here to do. We're here to save the planet. We're here to impact climate change. And so therefore, any reduction in emissions is going to be cool, right? Well, as it turns out, well, depends. Because when you look at the whole scheme of everything, you were saying, okay, you know, from the fertilizer to the manure to what they eat to there to, you know, everything we measure, that flatulence and burp is a very tiny bit. That's 30% of the whole thing. And of all the emissions from A to Z, it's incrementally small. But you need to measure that. So the question I probably need to ask is, to these guys, who are probably far more into it, you know, done it more than I have, is how do you then manage it? Or even to... You want to finish? Yeah.
Yeah, so we don't really like to use the term impact that much because it's not really defined. Like everyone has a different idea of what that means. So we look at World Fund, we look at the climate performance potential, or in short CPP, which is a methodology that we developed. We have a head of impact and he talked to a bunch of experts in this field. He's a mathematician, and it's a methodology to look at the decarbonization potential of the technology compared to the baseline tech. And we chose to look at the CO2 emissions because it's relatively easily available data, and it's quantifiable, and it's a good predictor for the global warming potential of a technology, or the impact on global warming of a technology, of an industry. And we also see it as a predictor for financial returns, because we will have to decarbonize the economy drastically. So not only can you measure the impact on climate change with this measure, but also we see it as a predictor for financial returns.
Sejal, I want you to have Tijl a chance to answer that question, but I want to do a quick follow-up.
I was thinking that, so what we often have to discussion is the breadth and the depth of the impact. And I think where you're saying is you were not maybe so convinced about the depth of the impact, so it was just a smaller thing. So I think what we do and what you also do is so we set levels where we say, okay, at this point we think the saving on CO2 or the other metrics we would have makes sense. And then it's also where you make a decision, do we think it's a relevant one? So we quite often decline a investment, not because we think it's a bad idea or it couldn't be a nice company, but we don't think it's significant enough for the thesis we have. So that's really where we say, okay, it's not you, it's us. But it's...
You've said that a lot then.
Yeah, no, I think the worst thing about my job is this, that you say no 90% of the time or even more. And I think there's so much cool energy and cool ideas. But you have to make a selection, and this is how we try to do it. So when is it relevant? And when do we think it fits in our thesis, and make that choice, yeah.
That's really interesting. Pia, I'm curious, in the algorithm that your team uses, let's say that a solution like I'm thinking of the Pepto-Bismol for cows example, although that's a very American brand, right? So an antacid for the cows, so there's less flatulence. I just have an image now of them, you know, before they go to bed, going to the medicine cabinet and taking up the tablets. So let's say that a startup comes to you and they have a really wonderful solution, and it's going to dramatically reduce 50, 70% of that output. And yet, even at 100%, it's fractional in terms of its overall effect. I mean, it's in the popular, you know, we all hear about it, but it's not, as Sejal is saying, that it's not the most important necessarily. Do you look at that and say, well, it's having a big effect on a relatively small piece of the problem, and there's a really good return? Or, you know, I'm sort of asking the general question of what are of the sliders, which are the most important ones?
So we have a threshold of reduction potential that needs to be reached with the technology. So that's kind of our decision lever, how we look at things. So it can either be a massive reduction in a smaller market or like a smaller overall emissions segment, or it can be like in a big market with huge emissions like animal agriculture, animal protein can be a solution like, that has a smaller share of the emissions that it reduces. It just needs to meet the overall threshold.
Got it. That makes a lot of sense. You reached for that just in time because I was going to ask you for your thoughts on that as well.
Yeah, so I would say this is, this is a tricky question a little bit because the thing is that how we look at this is a matter of what is the impact, but also we look at horizon, right? So there is like our investment horizon, which is relatively short, I think, for most of us, right? It's like, I don't know, 5 to 10 years, something like that. So it's relatively short, right, for this kind of technologies to actually take over like the whole planet, let's say. So this is it, but what we look at is what is the impact and financial return within our investment period, but also how would that look if we go into, on a worldwide scale, let's say. And this is a tricky question because the thing is that sometimes if we talk about big solutions, we need to think what are the potential externalities, So it's something that perhaps we don't think about today, or is because it's at a small scale. Here, and as an example, so of course there are startups. This is an area that we also look at. Is a matter of what to do with waste, right? Food waste, agriculture waste. There are wonderful solutions, so how can we valorize it, have different applications and so on, substitute some things that are much more dirty and unhealthy and so on. But the thing is that when you really think about this from an impact perspective, actually you go into some kind of externalities that you don't want. For example, you start thinking, okay, so how much volume actually of my waste is there available? Wouldn't it be one day that, for example, I don't perfectly good food or perfectly good crops go to the process as waste because simply there is not enough waste? Another part, on the other side, you can actually start asking yourself, okay, so maybe instead of thinking about these solutions, maybe I should think what to do to avoid waste, so to actually, I don't know, change our habits for shopping, for grocery shopping, change the production process and so on, or shipping and so on, right? So it's something that we consider, and it's really tricky and it's very complex, I would say, because it's difficult to say what actually can happen if we go into larger scale. And I would say how we approach it is that you need to have this, of course, the economic part, the business model and so on needs to work, but in terms of sustainability, you need to still try to imagine what will happen with a scale that you want to achieve for certain volumes, for certain markets that you find your application into. And if you go worldwide to make sense for your business, you need to think what will actually happen for the whole system as such.
Do you all find similar, it sounds like you all have some similar approach dealing with some of the same things?
I think externalities is something which we have also high on the agenda to think about that. Because sometimes it can just sound very good and then you have to realize, okay, what's the other effect? So I think an important thing is if you want to have a systemic change, so if you reduce something, you actually stimulate a certain habit you might want to have, you want to, get rid of altogether. Because you basically increase the license to produce. So what we like is to think about what are the systemic changes you can have, which is not always easy, but I think that's the real fun part of impact investing. If you can find that proposition that really fundamentally changes something and not reduces it. And I think that's the beauty, and if you recognize it directly, if there's a startup coming in who has just flips the script, changes it, you feel directly the excitement, like, okay, this is going to...
I don't want to interrupt, but I'm going to. I apologize. Very quickly. Do you have an example of something recently where that has happened?
Yeah, so we recently invested in Solasta Bio, which is a company who produces neuropeptides. And a neuropeptide is basically like a key and a lock in a body system. So they could produce specific for a species you want to kill. They can just turn off a body process. Bumblebees, bees, other vertebrates have no effect whatsoever because it just doesn't connect to their system. So you can get rid of chemicals so all the externalities on that part, or the collateral damage of novel entities or the chemicals, you just take away. So I think that's a very interesting new route, which allows you to step away from the chemical part, rather than saying, hey, I have something which is more effective. So these are the cool things I get excited about.
Sejal, I cut you off. I'm sorry.
You know what? It was just a comment. Okay, so sorry, we're completely off the pitch here, off the track here. But it's just occurred to me that actually, we've got these startups that have this amazing mission and purpose, right? In terms of climate change and emissions and help, feeding a growing population, I think, and they go, that amazing mission, which we are 100% aligned with, and we truly believe that, they're going to do it. What happens is, and me being sort of an early sort of investor and thinking about this, well, where's this all going? And also the fact that I come from the industry, and, I didn't mention that earlier, but I, I have 20 years experience in corporates, and I'm thinking to myself, so as investors, we're investing in these startups that have these amazing, technologies, amazing purpose and mission to combat, all our challenges, and then we're going to either IPO them, or sell them, right? Okay, so that's cool. Investors happy. We've done the metrics. Once we IPO them, and Beyond Meat is a good example. Once we IPO them, they're kind of more interested now on quarterly financing than actually continue to sustain their mission. I believe. I'm not. I'm opening another Pandora's box here. And then if we sell them to these huge corporates and conglomerate whatever, are we sure that they're also going to ensure that that mission, that purpose is going to be sustained? Or are they also going to start using that as to paper over the cracks? Is it opening it up?
I like it. I like it. So we actually, it's a very relevant topic at the moment in our fund. So we're thinking about including a clause of responsible exit. And we haven't figured it out yet. But that's a big question, right?
What was it called?
A responsible exit. So can we have a clause in our documentation where we safeguard that? Today, there was a publication of Tony Chocolonely, which people in the Netherlands for sure know, maybe also in the UK. It's a chocolate bar. And they have now set up a governance body which can actually forever call on the owner and say, hey, you're drifting away from the mission, which is a very interesting thought. It's now on LinkedIn. I think it was posted today. I think that's a really cool thing, and it's bravery, because you are limiting options. And I think as VCs, we never like to limit options. We don't say no very clearly because we might, But I think that's so. I thought it was a very cool thing, and this is something as Rubio we would like to work further on and see how we can incorporate it. But still, you want to do a good exit as well, and that's where you have the tension.
It's definitely something that for our fund, and as we go through it, we're thinking about and say, how do we make sure that when we do invest in these startups, we can put these types of clauses in? But that's a good one. Yeah, thank you for that. Sorry, yeah.
Sorry. So we like to think about it as the impact, although we don't like that term. If it's ingrained in the product of the company, then you can't really take it away from it. And if it's a product that's better than the alternatives out there, then it's gonna win, then it's gonna prevail. And you can't really, if it has inherent impact, you can't really take it away from the product, even if the mission-drivenness shifts.
That's really interesting, because it creates a tension, and if it's built into the DNA, it shouldn't change. You can also imagine somebody running the company going, well, I've got my my quarterly reports, and I've got to hit the numbers, and they start to make some decisions. I wonder, though, and I won't throw this out because it'll get into a lot of diving into it, but how the LPs feel about that, about how your LPs feel about it, because it may affect. I'm sure they're wonderful people and organizations as well, but it may affect their outcomes.
Yeah, so I think our LPs are very comfortable with this. So I think if you give us money, you know what we're about and what we try to achieve. And I think the market sentiment became even stronger. So what we saw when our fund was developing, so we were first family fund only. You can see there's more mission driven. But in the second fund, I think 50% is now an institutional. But these are certain kind of institutionals who are a bit further in their impact thinking. But I think you can see a clear trend in the market that investing will be about impact. And I think the real innovation is probably the most impactful, or is driven by impact, because that's where the opportunity lies at the moment, and the market need and the world's societal needs.
It's actually a good segue into a related topic. Jowita, I've asked you to start with, is now a good time to invest? But let me make it a little more interesting question than that. It's always a good time to invest in everything, because it's always now, and so now's the right time. Is there something about this time in history meaning hundreds of years, or history meaning the last 2-3 years, something that makes it now is the right time to be investing in this area?
Well, as you say, always good to invest. I mean, obviously, right now we are at so the technology is developing very fast, right? So we are on a very steep curve already for some time here right now. We have all the AI solutions and so on, so that are very loud nowadays. So I would say it's accelerating. So for sure we can expect big changes in all sectors, not only in agri-food but also in this we also have a society that is more conscious. And we are also, in terms of environment, of course, we are in a deep problem, I would say, and so this is something that needs to be handled for sure. And yeah, so I would say it is a good time. If it's better than others, to be honest, I'm not sure if I would find arguments if it's better than like 5 years ago or something, because I think it's or if it's right now better than in 5 years, right? So I'm not sure if I would defend this thesis, but let's say we want to invest because we also want to accelerate that. And it doesn't need to be the best time of all time to invest, but it needs to be good enough, and I believe it is good enough.
That's a good enough answer. A quick follow-up, which is there any particular technology that's available now that maybe wasn't a few years ago that you think will have a greater effect as a result of that?
Sure. So one of technologies that right now is having a lot of attention, but also that is got a lot of advancement is precision fermentation. So this is something that it's basically the technology started, I don't know, 70s, 90s, something like that. First in the pharma sector, who has that has better price points and so on. So it was easier to accommodate that. But in the last years, the technological progress is just immense, and many, like in terms of equipment that you can use, in terms of universities that actually educate people in this direction, and what actually you can do, because for those who are not familiar, it's a technology where you can use some feedstock. The easiest is here glucose, so simple sugar. You can use some microorganism to produce certain molecules that you want. And here applications can be super broad. It can be in food ingredients such as, I don't know, vitamins, nutraceuticals, colorants, really a lot. In agriculture, the same. So anything any chemicals chemical polymers, you can really produce a lot with it. It's a matter of how efficient is your process, what kind of cost points in the end you can achieve, and it's really amazing what's been happening in the last years and what is happening, how many companies are working on it, and what kind of applications that they can they find for broader markets. So I believe this is something that is really interesting.
I think there's a very negative sentiment at the moment in investing in food and ag. So I think it's a brilliant market to invest. because everybody's a bit scared. So I think if you dare to invest counter-cyclically, there's a good opportunity to invest. So I'm positive about that. I think a lot of people are worried about their portfolio, and I think so. Actually, 2 years ago was a really bad time in hindsight to invest. I think that's how the cycles goes on valuation, and so I think a market that's moving, there's always an opportunity. What I think is very interesting at the moment is I think the adoption of AI in a lot of industries. So you have like your primary product, but if you can have that add-on, I think the opportunities and the insights and the amount of data you can handle and what you can create is just amazing. And I think we're scratching the surface there. But it goes like extremely fast. So imagine that ChatGPT, which of course everybody has been talking about, but how fast that changed, that leapfrog, which was made there. And I think I can only wait to see that happening to all the other industries, and that's going to be very exciting.
Yeah, so I think in the recent years, the awareness around climate change has increased, like starting with Fridays for Future, but also in politics, and more regulations came into place. Countries and corporates are pledging net zero, and we need technologies to actually achieve those goals. So I think now is a good time to invest in those technologies and into new technologies that we need to be able to meet the net zero targets. And one area we are like very excited about is alternative protein, even if it had like some rather negative reputation in the recent years. But just thinking about the next gen of alt protein and how can we improve the products that even a wider share of the market would like to eat them instead of meat, or that they're even better than the animal product in terms of taste, texture, and price, and nutrition as well. And I think there's still a lot that can be done there.
My first answer is ask me in 5 years. My second answer is I completely agree with the rest of the panelists here. We're at this sort of new hype cycle curve, and I think that's going to help. Also, capital is expensive. That's going to help us. Valuations, especially where we are from, in Southern Europe, have decreased. So yeah, bodes well, and I think now's the right time. And I was thinking about your question, and I was thinking, I think there's a big driver here, which is I read the other day that $41 trillion of capital is moving hands from one generation to another. So we're at this period of time where it's generational change from baby boomers to millennials, and there's $41 trillion of capital changing hands from two different generations. So what does that mean? That means there's a generation with a certain mindset, a certain culture, and there's a new generation, right, who I think see the world in a completely different way, okay? I have 2 kids, and I tell you what, I don't know what world they live in. And I think that is going to be huge. I work for a corporate, and it took the 3rd generation to come in and say, we've got to do this. This is something for our future, okay? This is about the survival of the human race. And I think that, combined with that movement of capital, which is amazing amount, is going to be, I think it's going to be, consensual. It's going to be something that changes, yeah, absolutely. That would be my opinion. So it's going to revolutionize the whole thing.
I know that I'm very thoughtful about the 41 trillion that I'm going to hand down to my kids, which they're all waiting for. Succession was based on, I think. It's amazing how quickly time passes when four smart people with a lot of experience are having a conversation. I want to leave a couple minutes to see if there's some questions, and if that peters out, we have more to talk about to get to the end here. But any questions from either the folks looking for investment or other investors or just interested parties? I didn't mean to categorize you all in any particular way. Not a single question. You guys covered everything. I think we missed the very, very beginning of your question. Oh. KPIs, yes, okay.
Yes.
You're all too polite. Go ahead and jump in.
Yeah, I think so. So if I'm correct, you calculate everything back to CO2, right? Mm-hmm. Yeah. What else? Oh. All the different. Yeah. So I think there's an endless amount of KPIs you can use. It really depends on the product you have. So maybe do you have, as your founder, it sounds like, feel free to ask the ones that you're using, and if maybe they find those interesting, is that too much pressure on you to tell them what they should be looking at?
For me, it's kind of easy because, like, what we measure, we are agricultural startup, so we measure like food losses and chemical applications. And that's not always easy to measure. So I was just kind of curious, like, what else maybe you saw that's interesting and that you are looking for in the companies.
Yeah, no, and I get your problem. So you have to find a baseline, right? And that's super hard. So I think this is why setting a KPI sounds easy, but it's actually extremely hard. This is also my big frustration in impact investing, so you need to have direct impact, because if it's indirect, it's very difficult to say, okay, this is because of my investment. Whereas you actually feel sometimes like this is an important thing, like measuring biodiversity is a thing the world needs, but measuring it in itself is no impact. So this is what I think as an impact fund, or me personally, I'm struggling with. So I'm not able to invest in something I think is very important. So this is homework for us. So the only thing I can say is make it as direct as you can and find your baseline. And sometimes that means, like, I think today I talked to a agricultural startup and it was like, okay, we can save this. So, okay, so what could be the baseline? So maybe it's the advice you would normally get from an agronomist. That would be your application. Now, what you're doing right now, you are saving X, Y, Z. That could be your impact. And then I think you also have to be creative in how to extrapolate that, because you're sort of finding a formula. But that's hard work. And I think as an impact investor, this is something I have to do together with the entrepreneur. We have to support in that or have that conversation. But I like your question, because often when we start negotiating or doing the investment due diligence, that's the moment it gets at the table. So I can really, to all startups, think about it, and also at events, why not test it with an investor and say, hey, I'm thinking of this. What do you think about it? Am I going the right way? I think it's a very nice conversation and really drills down to the core of your business. So I think it's actually fun to have that conversation. We have that too little.
Yeah. Yeah, that's great. And by the way, I love the question, because I teach a class at Columbia Business School that's called Launch Your Startup. It's essentially an accelerator, and we drill in on that. You have to be able to stand up and defend that. And if you can't defend it, there's a whole group of people who are going to help, and then we bring in VCs to go back and forth. So it's a really fundamental, foundational question. Thanks.
I see a new panel here.
Sorry?
So that would be a good panel format.
Yeah, that's what we'll do. Yeah, well, I'll have you guys come to New York, and we'll do that, because it's every Saturday. It's a Saturday class. I would love that. I would probably have time for one more question. Anybody have another additional question? Or you can race off to the airport, which is what I'm going to do in a moment. I have a 10-second rule. So 10 seconds, nobody raises their hand. It's not shy. It's just they're done. All right, done then. So thank you all. This was fascinating. We could have gone easily an hour more, and if we'd started earlier, like in the morning, we would have. But I found this fascinating. Thank you so much.
Thank you.